Good morning, hope everyone is well. It's Thursday the 9th of November. I'm going to have a briefing this morning looking at a couple of things. The DAX briefly just broke to fresh lows in the last couple of minutes just before I've begun here. A number of German corporate earnings to have a quick review on. Also we're going to talk about US tax plans, talk about Trump's trip to China, some of the speech that he gave yesterday in terms of that content of his trip and what he's achieved. And then we'll look at some inflation numbers from China, the RBNZ decision, and then a few other things as well to cover. So hopefully I can wrap things up in the next 20 minutes or so. So first of all, let's just have a quick look at the DAX, because the last 2 minutes, just before I've begun, the futures have just had a brief flirt with what was the initial low print that was seen on the beginning of the week. The last kind of 2 days range that we've had in the DAX, about 1.5% from top to bottom in a move on Monday, more narrow the range yesterday, about 0.6. We just had a flirt with that and it's failed to break as yet. But one of the things that we've had is a pretty big move actually overnight in Asia, because if you look at these futures charts, before we get into the detail of the DAX constituents and their earnings reports, you can see here in the S&P future had a pretty big decline from overnight. Now, keeping in mind when you're looking at the S&P, of course, you're close to, and did print overnight in the Asian session, fresh all-time highs. We're getting ever closer to that 2600 level in terms of the S&P. And one of the things that we had last night, of course, was the Nikkei. So let me just show you what that looks like, and really I want to focus on that because it looks like the Nikkei was the trigger point. Now, I've had this shared with me this morning quite kindly. So looking at the Nikkei, obviously we've been talking about this in the last couple of weeks because we've been trading at 25-year highs in this index. And what happened overnight was that the Nikkei added about 2% before then dropping nearly 2%. Now, what was the reason behind this? Well, there wasn't really one single catalyst. What a lot of people were looking at and what the blame's being put down to is technically driven trading after indexes hit historic highs earlier in the day. Some talk about algorithmic systems exacerbating the move, and hence it was very whipsaw price action. But it wasn't immediately clear what propelled this mid-afternoon reversal, according to the contacts at Bloomberg. But certainly that has dented a little bit some of the equity sentiment for this morning, and then consequently the DAX as well is trading a little heavy amid some of these earnings reports, as I mentioned. So I was just going to have a look at the DAX firstly, and one of the biggest companies that's reported this morning in terms of the index weighted size is Siemens. Big company signaled a slump in demand for energy generating equipment is set to continue in the coming fiscal year after weaker orders led to a sharp drop in fourth quarter profit at its power and gas division. Now, here's the movers and shakers, the gainers and losers of the DAX index, and a lot of this is being earnings driven. So commerce is up about 2.35%, but if you look at the likes of Siemens, down about 3.4%, Adidas earnings down 2.5%, ProSiebenSat, which for those who don't know, that's the major television network owner in Germany, they're down about 6%, had a profit warning. So a number of companies here also just earnings related, quite a heavy day for German reporting season. And so this in combination as well, so you've got the Nikkei seeing that overnight negative volatility in the latter part of the session. You've got some earnings coming out of Germany, and then this was another thing that came out from last night. Not sure whether you guys had caught this. It was a bit later in the evening. But a US Senate tax cut bill differing from the one in the House of Representatives was expected to be unveiled today, complicating a Republican tax overhaul push and increasing skepticism on Wall Street about the effort. So basically what's happened here, there were reports coming that their plans are quite far apart at the moment between the two chambers of Congress. And so essentially what this means is that I think it was led by Paul Ryan. They were talking about potentially the corporate tax deal could be delayed for an extended period of time until they can work out a compromise that will be agreed or agreeable for both sides. This obviously is against the current timeline where likes of Stephen Mnuchin was speaking yesterday, and Trump, of course, himself have been pushing to get the corporate tax plan up and running and really push it forward by the end of the year. But some of the commentary that was coming out yesterday was that this debate at the moment is still ongoing, and there's some potential for further delays. So kind of three things here of slight negativity, and more importantly, I think the Nikkei play is quite interesting, because if you look at the likes of these push up to record high levels, normally we do see a little bit of a dip before then, where we normally get another kick on to the upside. Has been the more familiar trend. So quite interesting to just see how some of these topics have been playing out in the market so far. So equities definitely to be watched. And with the DAX, just having a look at this obviously on a slightly longer time frame. After that gap up that we had to kick off proceedings for November, since that point we have not yet closed that gap after jumping up above the 13,311 level and pushing all the way up to what was on Monday's open, the all-time high in the DAX future at 13,533. We have continued to drift lower, so a couple of key levels here to watch in the DAX if we do see some downside. We've had a brief run, as I say, on Monday's low, but it has bounced since then. But obviously that previous low on the 1st at the open sits just above the S2. Any breach of there you'd think might open up then a run down to fill the gap down at 13,249.5. But I guess one thing to be aware of is that if you ever try and short equity markets, you've just got to be a little bit more prudent with your time frames, i.e. what we've seen be a fairly familiar trend, certainly more prevalent I'd say in US equities, is that the short doesn't last for long, and then inevitably it gets counteracted by some pretty heavy buying at the lows, because fundamentally on a more broader perspective, for reasons discussed at the beginning of the week, the market still feels fairly comfortable with the kind of the overall setup in terms of slow progression on monetary policy, diminishing of risks that we've had as we discussed in the briefing on Monday. So yeah, just be mindful of that if you're trying to short equity markets. Is just, I wouldn't be sitting in a position short for too long. You'd want to be pretty proactive, I think, in managing that trade. On the other side, however, it's a little bit different. If you get a good entry point at the low to get long again, you can be a little bit more ability to stay in that trade and scale out of it and so on, have a decent target. Okay, a few other things to look at. We obviously had Trump in China, and this is the kind of headlines that you're seeing. So they've basically, between the two countries, agreed in the region of $250 billion of deals. So one of them I was hearing this morning, I think it's Boeing. China have said they're going to buy approximately $37 billion contract with Boeing. But as this headline suggests, the value here has little substance, and the reasons for that is that most of these deals are classified as non-binding. So basically, when you're on one of these kind of big international headline tours of major statesmen, what tends to happen is they want to have good photograph sessions of them signing deals and to publicly put on a good show. But in actuality, all this is just pledges that they might buy 250. Some of these might be over a decade period, and also a lot of these deals might never actually materialize. This isn't exactly companies coming in saying, I've signed it, we're going to get and receive our order in the next year. This is just a pledge that we might sign. But certainly you can imagine from a political angle what this does for Donald Trump, because he comes home from Asia, he goes, guess what, guys, I got $250 billion. how do you like those apples? And this certainly plays into his his marketing of what Trump has done with equities at record highs. Obviously, this does kind of fit with that kind of view, if you like. So I don't really read too much into this. This is more kind of headline news for the sake of it's Donald Trump, rather than it is something that's going to move financial markets. Other things to look at. Some quite interesting things here developing still for Brexit. Now, one of the things is that obviously UK PM's cabinet has now lost 2 members within 1 week. The International Development Secretary Priti Patel offered her resignation yesterday. So continued ongoing issues within the Conservative Party, and again this detracting from the bigger issue at play, which is of course the negotiation of Brexit. And today is significant, of course, because as this article in the FT suggests, we are now, I believe this is the 6th round of Brexit talks with Europe. And what's happening this particular round is very important, because what they're trying to facilitate is a transitional agreement for then when we have a big EU summit come December. Now, the EU have said that they're going to give 2 to 3 weeks to make Brexit bill offer. December summit could fall short on transition guidelines without a settlement. So Europe are basically saying this 20 billion that you've tabled at the moment, you're going to need to be more serious than that and up the figure, because otherwise if you don't do it in the next 2 to 3 weeks, there's not going to be enough time to then put forward the transitional deal for the EU summit come December. And obviously this would have very negative connotations for the sterling currency in the short term, because expectations are at the moment that UK will make a concession, we will pay a higher fee, this divorce bill, and then we can secure that part of the deal to continue trade talks. Now, if that doesn't happen by year end, then you can expect an increase of political uncertainty, which will grow in terms of its influence and weight on the British pound. On the other side, if they do secure it, then you can expect a pretty decent relief rally in the short term. So all kind of hinges on, really, can and will, I guess, Theresa May up the figure, and will she get backing from other members within Parliament that is the right decision, given the fact that obviously many lawmakers will be very reticent to want to hand out large amounts of money going forward. So this is to be monitored. You also had Bank of England policymaker McCafferty. He's obviously the most hawkish member on the Bank of England, warned yesterday that clarity on Brexit will be needed by early next year to better allow businesses to forward plan. So if you think about it, we had a closed door meeting on Friday. All of the heads of the major institutions in the financial sector were meeting in London for a closed door meeting about potentially moving thousands of staff out of London into Europe because of a lack of clarity on Brexit. The EU are putting the squeeze on, saying you've got to make a decision soon, otherwise this transitional deal by year end is not going to happen. You've also got political uncertainty continuing domestically for the Conservative Party. So Theresa May's got her back against the wall at the moment. So if this continues in the coming weeks, I would expect that this will add more weight to the pound. But I do think that it's not a matter of if, it's more a matter of when she ups the figure of 20 billion. When that does happen, let's say she goes to 30 billion or 40 billion, I think 40 billion is probably more going to be around the figure, then I would expect some stability to return in that respect. And in that scenario, I'd expect it to be supportive of the sterling currency. Okay, a few other things, because I know we started the briefing a little bit later than normal, so just want to wrap through the headlines. You've had Chinese consumer inflation pick up as food price falls are moderate. So inflation picked up unexpectedly last month as pork price falls eased and fuel costs rose at a quicker clip. So you can see this here. CPI has been fairly constant in China, whereas it's the PPI that's seen the large part of fluctuations. Overnight we did have a bit of a move in the Kiwi dollar in the FX market. This came as New Zealand's central bank signalled the interest rates may need to rise slightly earlier than previously expected as it revised up inflation forecasts. So no change in rates. They kept the official cash rate at 1.75%. That is a record low at 1.75% in New Zealand. But again, they did bring forward in terms of signalling that interest rates may need to rise slightly earlier than what we thought originally. One other fact that I just wanted to show you. Now, if you don't already do so, you can just go onto the World Gold Council. So if you trade gold, really this is a must read or a must subscribe newsletter subscription, I should say, that you can sign up to on their website for free. But basically they've issued a quarterly report on gold demand trends. This is looking much more on the physical side, generally speaking. But there was quite an interesting thing here about gold demand in Q3 of this year is at an 8-year low as ETF inflows have slowed sharply. So you can see it here going all the way back to Q3 of 2009. Now there's a couple of interesting points here that I just quickly want to run through. Jewelry demand fell 3% globally in Q3 by a sharp drop in India. If you think about India, India is actually the second largest consumer of gold, and their actual year-on-year demand was down 25%. Now, why was that? Well, this was disrupted by changing tax regimes and tighter regulation around jewelry transactions. On the flip side, though, China was up 13%. Jewelry demand was boosted by various holidays that have occurred during the Q3 period. And so some quite interesting things here. I was just having a look when we talk about India. I know I talked to you guys when in the first week in the commodity lecture. The total monsoon season was quite interesting over Q3. Total monsoon rainfall, although broadly normal, was around 5% below long-term average, was distributed unevenly across the country. And so inconsistent rainfall during the Kharif crop sowing season, together with prolonged monsoon rains, inflicted damage on those crops. And if you think about it, statistically, as I said, India is the second largest consumer of gold, and of that demand from India, 60% comes from agriculture or farmers. And so actually an inconsistent or below 5% average crop season in India does have a very big impact onto the demand side of the equation. And obviously this is very important given the amount of demand that they make up on a global level. On the flip side though, in China, it's been a different story. Actually, China consumption or demand has gone up sharply, mainly due to demand for jewelry. As I said, there's been a variety of different holidays, which has meant that typically you've had Chinese Valentine's Day and also the Autumn Festival, which for those not familiar with is when parents basically buy their children gold jewelry as a sign of happiness and good luck, in terms of a cultural aspect. So just thought I'd point this out. It's quite interesting. If you don't already subscribe to the World Gold Council reports, then it doesn't cost anything. I do think it's a worthwhile read in terms of their quarterly reports that do come out. Quick look at the calendar, and it is relatively quiet for the morning. We did have some German trade balance data earlier. In terms of the export number, minus 0.4. Expectations were minus 1.1%. So exports were down, but not as bad as expected. Imports were minus 1%. Expected was a plus 0.3. Elsewhere, you've just had the release of the latest ECB bulletin, but reiterated views from the most recent press conference. I've just seen that come down on the tape. And then really that's it for economic data for the morning. We look to the afternoon, Thursday, so your regular weekly jobless claims, but I wouldn't be expecting too much in the way of market reaction from that, just given the fact that we've now kind of reverted back to the mean after the hurricane-inspired volatility that was seen a few weeks ago. And then going into the afternoon, you've got wholesale inventories and sales, but there are a whole host of speakers coming out throughout the day, and predominantly ECB focused. You've got COA, Mersch, Constancio, and Lautenschlager. So the full kind of spectrum of policy views, ranging from the doves all the way out to the Sabine Lautenschlager, who's a hawk. One of the final things to quickly just have a quick look at, I know someone asked me about it this morning, was oil. We had a really quite violent blip in prices shortly after 5 p.m. yesterday, and I've asked around to see what that was on the back of, and the answer that I got was nothing. So you thought Bitcoin was volatile. Well, other assets like the Nikkei overnight, oil at post 5 o'clock last night. It's been quite tricky actually the last couple of days, because we've seen quite a few moves like this, which there hasn't really been a lot of fundamental catalyst as a trigger point, let's say. But obviously we did have the inventory data earlier in the day, but this move did come quite a bit after that. I mean, on a broader perspective, you can understand the reasonings for wanting to be long, and we had a retest and a break, probably some stops tripped when we went through 69, but the market did come down awfully quickly after the back of that. But as far as I've spoken to a few people this morning, there's nothing in terms of a piece of news or a headline that people are attributing to that rise and fall of oil. So I don't have much more to add, but looking at where the price activity is at the moment, Xing that move out, we're pretty much where we were prior to that occurring. So not too much new to speak of in that respect. Okay guys, going to leave it at that. So have a good day. Any questions, I'll be monitoring the chat room, so just feel free to pop them in there. I'll do my best to help. Otherwise, have a good day. Thank you very much.